seeing how they performed as of yesterday. We had they closed actually at 330.00 share price actually on the Malawi Stock Exchange. The FMB Capital actually began the year with a share price of around 110.86 and has since gained around 198% on that price valuation, ranking it fourth on the Malawi Stock Exchange in terms of year-to-date performance.
Well, of course, investors should, however, take caution of the FMB Capital Holdings' recent poor performance. They lost almost 20% of their value within the past 4 weeks. But it is still the fifth most traded stock on the Malawi Stock Exchange over the past 3 months, from July 19th to October 13th, 2023. And it has traded a total volume of 6.12 million shares, valued at 2.39 billion shares. Over 3.9 billion in terms of money, monetary. Over the period, we're seeing an average of 97,220 shares traded per session, and a volume high of 2.83 million was achieved on September 6th of the same period.
Exactly, and moving on to another security that was traded as of yesterday, we have National Insurance Company Holdings. This was also listed on the Malawi Stock Exchange. Actually it's nationally traded in the Malawi Stock Exchange under a ticker symbol of NICO. Their International Securities Identification Number, actually. So National Insurance Company Holdings actually currently is the 10th most traded value stock on the Malawi Stock Exchange, with a market capitalization of around 165 billion kwacha, which makes it about 2.65% of the Malawi Stock Exchange equity market.
Well, the current share price of the National Insurance Company is at 157.79, and that is where it closed its last trading session. But we're seeing a 157.79 share price on the Malawi Stock Exchange, and it is actually recording a 0.1% drop from its previous closing price of 157.99. Well, National began the year, as you can see, with a share price of 60 kwacha, and has since gained 163% on that price valuation. So this is particularly ranking it the fifth on the Malawi Stock Exchange in terms of year-to-date performance.
Yes, Victor, and National Insurance Company Holdings is actually the 60th most traded stock on the Malawi Stock Exchange over the past 3 months. And it has traded a volume of around 3.32 million shares, valued at around 540 million kwacha over the period, with an average of around 52,676 traded shares per session.
Well, thank you, Gloria, for those valuable insights on national insurance as it stands in Malawi. But to move into some insights within Egypt.
Exactly, and Egypt, there are some intriguing news from Egypt where they have made the debut in the panda bond market, issuing 3-year panda bonds worth 3.5 billion yuan.
Well, looking at that particular situation, Gloria, what more valuable insights would you have on that particular topic?
Well, it's interesting, Victor. Panda bonds are dominated in Chinese yuan, but issued in foreign borrowers, So it's a unique way of Egypt to raise funds and manage its foreign debt repayment challenges. So the bonds were actually priced at 3.5% annually for 3 years, which is notably lower than the interest rates for a dollar-dominated bond. So this could have been an attractive option for Egypt to access international capital.
Well, according to the latest news, Egypt has been seeking alternative financing sources because of its foreign debt that is growing substantially over the past 8 years as of March 2023. They had a significant amount of medium and long-term debt coming due in the second half of 2023 and the first half of 2024. But of course, one of their financial moves was a currency swap with the United Arab Emirates, and it was amounting up to 1.3 billion US dollars. And back in August, Egypt's cabinet approved the issuance of a 5-year samurai bond worth 500 million US dollars, denominated in Japanese currency.
Actually, in February, they also raised a $1.5 billion through 3-year Islamic bonds known as Suzuk, with a yield of 11%. So Egypt is certainly exploring various avenues to meet its financial obligations.
It's a smart strategy. It really is. And by diversifying their sources of funding, they can potentially manage their debt more. And of course, it creates efficiency and secure competitive interest rates.
Exactly. And then this move into the Pada bond is another step in the direction. It's be interesting how to see how Egypt continues to navigate this evolving financial landscape.
But of course, much as we are highlighting this particular movement within the financial landscape of Egypt, it is actually quite fair to also provide insights within the agribusiness in this very financial landscape.
And this could potentially be a game changer for Egypt's agricultural landscape. These talks could significantly reduce our current dependence on imports of staple crops like wheat and corn.
It's actually fascinating. And Egypt, known for its ancient agricultural history, it has been striving to grow more of its own food. And they've got the land, but they're still cultivating just about 4% of it.
Exactly. Now with the AI actually Dahar in the picture, the scale could be massive. We're talking about a potential acquisition of hundreds and thousands of hectares in Toshka, southern Egypt.
This has the potential to impact millions of people, especially given that wheat imports are used to make subsidized bread, a crucial staple for millions of Egyptians.
That's interesting, Victor. And it's actually a delicate balance, you know. On one hand, it's about food security and reducing import bills. And on the other hand, it's about concerns about the environment impact, especially when it comes to concerns on the water use.
Yes, and you know how much water is such a large input within agriculture.
Exactly.
But moving into the water use, as much as we are highlighting it to be a critical issue here, in the past events, investment in Toshka, like the Al Hadra made, didn't go without criticism over water use, and it is also it also stands within sustainability. And in the desert, using water efficiently is paramount, of course. So Al Hadra seems to be adjusting its strategy to focus on wheat cultivation locally.
That's actually a significant approach in their prudentialized. So the president, Abdel Fattah el-Sisi, has pledged to revive the Toshka project and the Al Dahra in adapting to that vision.
Well, they now actually farm a considerable area in Toshka and other regions, are selling the majority of their produce locally. And actually, this is a shift from the previous model of exporting much of it.
Exactly, but not everyone is actually on board with this desert farming, right, Victor?
That's correct, actually. Some experts argue that it might not be the most efficient use of resources. Actually, they say it is better to import grain from areas where it can be grown more easily and cheaply.
Exactly, and it's actually a complex issue, in my opinion, with various angles to consider, from food security to economic impact on the environmental sustainability.
Exactly. But of course, it is always fascinating to see how these talks between Al Hadra and Egypt develop and how it could shape Egypt's agricultural future.
Exactly. So that's why we had from Egypt for you this morning. But we have some prominent news coming from the Federal Reserve as of today's speech, and we'll be diving into their insights to know what happened on the financial markets today.
Well, as a financial analyst and financial market observers out there, investors, strategists, it is always crucial to keep an eye on what these Fed officials actually have to say, and especially with the ever-evolving economic landscapes, it makes you have to be vigilant with every move you make. So Gloria, let's jump right into it.
Exactly. So we have John Williams, the president of the Federal Reserve Bank of New York, moderating a discussion with the Intel's CEO Pat Gelsinger and at the Economic Club of New York event.
Well, indeed, Gloria, this discussion could provide valuable insights into the intersection of technology and economics. With a rapid pace of technological advancement, the Fed is undoubtedly keen on understanding the implications.
Exactly. And then later, we hear from Michelle Bowman, a board governor. She'll be speaking on responsible innovation in money and payments at the Howard Law School program on International Financial Systems Roundtable on central bank digital currency in Washington.
Well, digital currencies and innovations in payment systems are incredibly relevant topics. With cryptocurrencies and central bank digital currencies gaining traction, it's essential to understand the Fed's perspective.
Exactly.
And actually, at around 10:45, we have Tom Barkin, the president of the Federal Reserve Bank of Richmond, speaking to the real estate roundtable. And the real estate market plays a significant role in the broader economy.
Absolutely, Victor. And real estate often reflects economic wealth, and insights from Barkin could actually provide a glimpse into how the Fed views the sector's role in the whole recovery.
Well, later in the day, at around 5, we have Neil Kashkari, the president of the Federal Reserve Bank of Minneapolis, he will give a lecture on the intersection of Federal Reserve in the healthcare sector at the University of Minnesota Medical School.
And healthcare is also a crucial aspect of our economy and society. It's actually fascinating to see how Fed is involvement in this sector, and their insights could shed light into this unique intersection.
And a quick reminder to our viewers, Federal Reserve Chair Jeremy Powell will also be speaking later this week and will keep you updated on his remarks.
Exactly, and as you can see, there's a lot on the Federal Reserve's agenda today, and we'll be watching closely for any hints and insights that could impact the markets on the broader economy.
That's right, Gloria. The Fed plays a pivotal role in shaping economic policy and monetary decisions. So what these speakers have to say is very much significant.
So that's the roundup from Fed and the updates we have from them. But however, we are diving into the tech world now, where we have these mega cap stocks that are creating a unique buzz. And we have got some big players on the table. We have Meta Platforms, Amazon, and Apple. So these companies with market capitalizations of over $200 billion are thriving even in uncertain times. And of course, we want you to know that these are which ones the analysts are looking out for most, which ones are the most attractive in the market.
Amazing. It's actually really nice to see the tech industry taking these markets by storm, especially with also the Microsoft indulgence into the whole thing. But Gloria, any more deeper insights within that particular point of view?
Indeed, Victor. Let's start with the Meta Platforms. Actually, we have this social media giant that has had a solid comeback from after challenging quarters. So Meta, actually previously known as Facebook, faced some pressure due to its changes in digital spending and Apple's iOS privacy policies. But they have bounced back impressively. So their second quarter 2023 revenue grew by 11%, and they are guiding for even more numbers in the third quarter in the range of around 32 billion to 34.5 billion, indicating a year-over-year growth of at least 15%.
Amazing numbers. But well, we're seeing Meta's previous performance being quite shaky, but yet still promising. What are your insights on Meta taking over the tech world, particularly, and its effect possibly on other stocks and big dogs within the tech industry?
Actually, before we go there, we have those with those impressive figures, Victor. We have Mark, the CEO of Meta, that seems pretty optimistic actually about the future, especially with the strong engagement they're seeing across their apps and their AI initiatives. So he's also keen on improving Meta's profitability through frequency measures. And as from the analytics view, we have buying rating on the Meta stock with a price target of around $400. So he highlights that Meta's advertising revenue growth is actually tracking ahead of the Street's consequences, and he also expects an operating leverage from the increased efficiency. But what about the worries about their 2024 operating expenses? What might rise significantly?
Well, looking particularly at these numbers, in my perspective as an individual financial analyst, I think we're going to see a jump in prices. We must see a jump in prices because we're not seeing anything taking Meta down. The market is still rather small, but the demand rises by every hour that passes. So my take on it is that we're seeing positivity coming our way.
And given their product roadmap and lower chances of substantial rise in the headcount. So Wall Street is pretty bullish actually on Meta platforms with a strong buy consensus rating at an average price target of around $376.03, which implies a 17.1% upside potential.
Well, actually, that's right. And I feel like the stock rallied more than 167% year to date. But now shifting our attention actually to Amazon, not leaving it behind as a tech giant as well within e-commerce. Amazon is a giant e-commerce and cloud computing, and they've been quite impressive in their second quarter performance. And actually, Amazon returned to double-digit sales growth in the second quarter, and their cost-cutting efforts boosted earnings very much. Actually, even though Amazon Web Services growth slowed to 12%, they remain confident about its potential, especially in generative AI.
Exactly, and let's not forget their advertising business, which saw sales growth in 22% in their second quarter in 2023.
True. Actually, that's another promising aspect of Amazon. Now, Goldman Sachs analyst Eric Sheridan expects stable AWS revenue growth in the third quarter of 2023 over the second quarter, followed by reacceleration in the fourth quarter. And of course, this is to be driven by various factors.
That's interesting, and he actually believes that Prime Video ads could be nearly around 2 billion revenue opportunity for Amazon in 2025.
Absolutely. And actually, Amazon has a strong buy consensus rating on Wall Street with an average price target that implies a 36% upside potential.
Exactly, and now moving up to Apple, which has been dealing with macro uncertainty and high interest rates affecting consumer spending on its products.
Yes, actually, it's been a bit challenging for Apple, with their results reflecting the impact of weak consumer spending, particularly on products like iPhone, Mac, and iPad. Well, reports of issues related to iPhone 15 are growing competition, and they have also weighed on the stock.
Exactly, and Apple's coming earnings may not be a massive catalyst for the stock, but analysts are cautious optimistic.
Well, including Morgan Stanley's Eric Woodring, who maintains a buying rate with a price target of $210 US.
Exactly, and it's also interesting to note that the Wall Street sees higher upside potential in Amazon compared to the other two mega cap tech stocks.
Absolutely. Well, Amazon's dominance in the e-commerce and cloud computing, along with prospects in AI, are growing advertising revenue, and it is what is driving this sentiment.
Exactly, and diving into actually the world of Amazon is actually an intriguing journey. While Amazon, under the Jeff Bezos leadership, went public back in 1997 at just $18 per share.
That's right. And if you had invested $18 in Amazon back then, it would be worth a staggering 31,435 US dollars today. Well, with a compound annual growth rate of 33.3%. This is certainly the stock to go to.
Exactly, but things haven't been all smooth sailing for Amazon in the recent years. The e-commerce giant has underperformed the S&P 500, mainly due to the calm down when the e-commerce sales returned to historical growth.
And actually, that is where it gets interesting, Gloria. While e-commerce is vital for Amazon, it is not the whole picture. They have many other moving pieces that contribute significantly to the company's profits, actually.
Interesting. And one of those pieces in Amazon's advertising businesses, which performed actually in 2022, growing by 21% to nearly $38 billion, making up 7.3% of their overall revenue.
That's right. And actually in 2022, Amazon's revenue from advertising services alone was 2.5 billion US dollars, higher than subscription services. And actually it includes the highly profitable Prime membership.
A big player in the digital ad businesses, Amazon actually holds just 7% market share compared to Alphabet's 39%. So the competition is really fierce.
And Amazon isn't backing down. They're introducing limited Prime video ads and allowing existing customers to opt out of ads for a fee.
Exactly, and Prime members in the United States actually pay around $139 a year, which could be like $11.58 per month when paid annually. So all around like $14.99 per month for a monthly subscription. So the $2.99 fee for free ads and all that is a service for a significant bump.
Comparing Prime Video with Netflix, it is certainly more expensive.
Exactly, and so we could keep a close eye on Amazon's revenue related to Prime Video. It might not be a game changer, but however, it's definitely meaningful.
But analysts actually believe Amazon can generate over 7.2 billion Prime Video ad sales, given their impressive growth in 2022.
Exactly, and it's also crucial, but its experiences a slowdown actually, with revenues growing at around 8.6% in 2023 compared to 29% in 2022.
But actually the challenge is that the AWS is getting hit with requests from companies looking to cut costs. But Amazon believes that the slowdown wouldn't persist, and they're optimistic that revenues lost from cost optimization will be made up with increased workloads and new customers from generative artificial intelligence.
Interesting, and Amazon is actually betting on AI. They've announced its initial $1.25 billion investment actually in the AI startup, which is called Anthropic. So with an option to invest an additional $2.75 billion.
Much like OpenAI and Microsoft. Actually, AI could be the game changer of Amazon and the entire whole of it as an entity.
Exactly. So we'll be back from this short break with more insights concerning the Mexican stock markets and some insights from BlackRock.
Smart 24, driving business.